With so many methods and vehicles within the stock market, investors find themselves sometimes struggling to find the right strategy in stocks or ETFs to buy in order to catapult them into retirement. But what most dividend growth investors fail to realize early on is that they are oftentimes working harder than smarter. You see, there are so many tried and true strategies when it comes to long-term investing, and even dividend growth ETFs with long-term proven track records of dividends and capital appreciation to go off. In this video, we are going to dig deep into the VYM ETF, which is one of the highest quality, in my opinion, dividend growth ETFs out there that doesn't only offer sustainable dividends plus a healthy amount of dividend growth, but also massive capital appreciation on top of that. We are also going to be going over the exact math and explain how long-term investors with a relatively small amount of starting capital could completely retire off the VYM ETF forever. Now stay tuned because we are going to be going through all this and more. Right after you, please drop a like in this video and subscribe for more future content like this. So first things first, heading over to the Vanguard website. The VYM ETF is the Vanguard High Dividend Yield ETF. Now VYM's overview is pretty simple. The product summary says seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. Provides a convenient way to track the performance of stocks that are forecasted to have above average dividend yields. And it follows a passively managed full replication approach. Now VYM's inception date was 11/10/2006, so this one has been around for a while. And like I said during the beginning of this video, that's important because even though past performance doesn't necessarily indicate future performance, looking at how a stock or an ETF has performed long term could give investors an idea of how it could perform in the future. Now looking a little bit more into VYM, since 2006, the fund is up around 117.79% as of now. And what's crazy is this is not dividends included. This is just the ETF price gaining value year after year after year for the most part. The Vanguard High Dividend Yield Index 52-week range is 94.59 and 113.78 as of the high. So even though VYM is right now trading towards the top end of the 52-week range, for long-term investors out there, it could still be a good time to get in. VYM does also pay a dividend, which we are going to go through here in a second, and it is paid quarterly. Over the last 12 months, VYM has distributed around $3.34, giving the trailing 12 months over a 3% starting yield. The assets under management is $50.62 billion, making this one of the larger ETFs out there. Now, one of the many great things about VYM is, of course, the holdings breakdown. VYM is heavily diversified with over 460 different holdings. The top 10 holdings being companies like Exxon, Johnson & Johnson, JP Morgan, Procter & Gamble, Broadcom, The Home Depot, Merck, Chevron, Pepsi, and abbvie. All companies that have been around for a while, all companies that pay dividends and have had capital appreciation, and best of all, companies that also increase their dividends consistently, or at least have historically. The holding breakdowns as far as sector is financials 19%, consumer defensive 14%, healthcare 13%, industrials 12%, energy 10%, technology 9%, utility 7%, consumer cyclical 7%, communications 3%, basic material 2%, and a tiny bit of real estate. Now, like we hinted at earlier, VYM does pay a dividend, and it's actually a very decent starting yield. Considering the ETF price is up quite a bit, the trailing 12-month dividend is giving investors around a 3.02% starting yield. But what's very important for investors to understand is, of course, VYM, or the Vanguard High Dividend Yield Index, dividend growth, which is basically how much this ETF is paid as far as dividends historically, and how much in dividends we could project out that VYM could pay in the future. Now, looking at a few different time frames, VYM dividend growth rate on the 3-year is 6.09%, on the 5-year 6.84%, on the 10-year 8.90%. So even if we were to take the average and assume that VYM is going to have a 7 or 8% increase consistently year after year, this means that investors that buy into VYM now are going to likely be paid much more in dividends long into the future. Now keep in mind these are all estimations, and assuming that VYM has an annual dividend growth rate of 8.70%, which means the dividends double every 8.3 years. Now again, it's just an estimation. This is not necessarily going to happen. This is just going off of the math, the current dividend that's been paid, and it can extrapolate out from there. But in theory, VYM could be paying around $3.84 in 2024, $4.17 in 2025, $4.54 in 2026. By 2027, VYM could be paying almost $5, and by 2033, VYM could be paying $8 per share. Now, to some of us younger, newer investors, that might seem absolutely ludicrous. But if we were to go back in time and see what VYM was paying out just a matter of a few years ago, It all starts to make sense and actually even sort of paints a pretty bullish picture. Looking back to just 2010, which is around 14 years ago, VYM was just paying a little bit over $1 a share per year. And once again, moving to current day, 2023, VYM could be paying around $3.53 per share, over 3 times as much as it paid just a matter of a decade or so ago. So since we now went over all that, let's get to the interesting part of this video. If an investor was to somehow invest $100,000 into the VYM ETF and never invest another dollar from there, just reinvest all the dividends that VYM offers from now up until retirement 30 years from now. Again, this is for a younger, long-term investor. The outcome is honestly pretty shocking. So VYM currently has a 3.05% initial starting dividend yield. The annual dividend amount increase could go up or down, but we're going to go with 7% annually. The expected annual share price increase around 3%. 30 years invested, quarterly distributions as far as dividends, dividend reinvestment turned on, and a $100,000 starting balance of VYM, or just around 910 shares. So in theory, this is saying that an investor buys 910 shares of VYM, turns on drip, and then basically logs out of their brokerage from now until retirement. Let's see exactly what they'd be left with. So here we go. Year number 1, this investor would be making around $3,085 in dividends from the initial yield of around 3.05% and the initial balance of $100,000 invested into VYM. Now, of course, year number 1, you're not going to be able to live off dividends of $3,000 by any means. And even by year number 5, you're only going to have around $125,000 or around $4,500 in dividends. But keep in mind, this is just in theory an investment portfolio that an investor would start now and then never put another dollar into it until retirement. 10 years in this portfolio in theory would be worth around $170,000 with almost $7,500 a year in dividends. By year number 15, halfway to retirement, this investor's portfolio would still be very, very shy of what anyone would pretty much need to live off of. $238,000 as far as portfolio value, and over $12,000 a year in annual dividends. By year number 20, $348,000 and $22,400 in dividends. Now we're starting to slowly get somewhere. And as you can see, the power of compounding from year 20 to 30 starts to really move the numbers drastically. By year number 25, $534,000 and $41,000 in annual dividends. Again, just off an initial $100K invested in VYM, never adding another dollar, just reinvesting the dividends, setting it and forgetting it. And by year number 30, in theory, this investor could have $869,000 in VYM with over $82,000 per year in dividends, which in most cases could be enough to live off of. So there we have it, guys. There's some of what the VYM ETF has to offer and some of the reasons why I think VYM should be a staple in most long-term dividend growth investors' portfolios. The power of compounding is pretty amazing. And by the example we gave, it really just goes to show that if an investor stays invested long enough and has a decent amount of money to start with or a decent amount of money added consistently, pretty much any average investor could retire off of a high quality dividend growth ETF with a long track record without even thinking too hard about it. But I want to hear from you guys down below. Is VYM a staple in your portfolio? Tell me why or why not. If you enjoyed this video, make sure to please drop a like on the video and subscribe for more content like this.